Let's turn to business news now with Nona Peltier. Nona, hi Nona. The Reserve Bank released its half-yearly financial stability report today.
That's right, and it showed up very few surprises there. In fact, nothing really of surprise. However, a very good overall checkup for the financial stability of New Zealand, although there are some threats.
The Reserve Bank, though, its mandate, one of its mandates is financial stability, right?
Right, so if they had found some,
right,
could have been a problem.
If they run screaming from the room, we're in serious trouble.
So you expect a kind of steady as she goes kind of report. No surprises, is really good.
Although they experimented a little bit with some stuff around the Auckland property market, didn't they? Much earlier in the year.
They have actually identified some threats, and one of them is the Auckland housing market. Hot housing prices, not just in Auckland, but elsewhere too. Rising interest rates is a problem. And the dairy sector debt.
Right.
So those three things combined. We've got a lot of people carrying a lot of debt. Dairy farmers are one group that definitely have been carrying a lot of debt. So even though dairy prices have improved, it's going to put the dairy farmers under risk of any kind of future shock. It's going to be difficult for them to weather through that because they're already carrying a lot of debt. Also, homeowners, people who have been buying into the housing market, interest rates are moving up for sure, not moving down anymore. And so, you know, when they come to refinance and so on, they could find themselves in some trouble there as well.
So this is singing from the same song sheet as the government. The government's saying the same thing, right? Bill English, Nick Smith. Right.
So this is a risk. And of course, you know, these things plus the housing market, there's always the chance that it's going to continue to grow even hotter, I suppose. And yeah, so these things all together concern the Reserve Bank. But overall, you know, analysts had a look and they said, hey, it's a pretty good report overall. So steady as she goes for New Zealand. And, you know, we have some other data that kind of supported that.
I see, because you've written it for me, the NZIER, so the Institute of Economic Research, right?
Yeah, so their predictions are quite positive for the New Zealand economy. It says the New Zealand economy is actually quite resilient to external shocks. So the Donald Trump uncertainty that has caused, you know, quite a lot of, I guess, nervousness, jitters in the world markets, less so in New Zealand, seems to be quite steady here. And the earthquakes, you know, that's really, you know, in a lot of countries, if something like that happened, goodness me, you know, it could have been really quite severe to the overall economic outlook. But the NZIER thinks that that particular impact will be felt in the regions where the damage occurred and not widespread. So yes, there will be some, of course, issues with that, but not across the country.
We're about to talk about that, actually.
So nice lead-in, right?
Nice lead-in. Tell us about the markets. What do they do today?
So just before I leave the NZIER, they're expecting economic growth to average above 3% for the next 5 years. That's pretty good. So the top 50 index was barely changed. It was down just 5 points to 6,897. The dollar's trading a little bit higher at 71.4 US cents, 95.6 Australian, and 57.2 pence.
Nona Peltier, thank you so much.